All right, speculators, let's fire up the Future Fanatic live stream for the afternoon of Thursday, January 29th, 2026. Yeah, I'm getting a little later here. Lots of updates to my streaming software, and I'm just getting used to it. It's got a bunch of new features. I think I'm going to be able to broadcast in better resolution so you can see my fine skin here at some point. Before we get started, remind everybody this presentation is for educational purposes only. I don't leave this disclosure and disclaimer up on the screen all the time, so just make sure that you're familiar with it. Presentation is for educational purposes. The opinion expressed of those of the presenter only. All trades presented should be considered hypothetical and should not be expected to be replicated in a live trading account. You're going to want to know the CFTC Rule 4.41 and understand everything that the Commodity Futures Trading Commission has to say about risk and risk management. Thank you for the ones for picture and sound. I appreciate it. Okay, I'm basically done in, well, I am done in all of the prop and some other accounts. So I was just going to show you on the screen here a live trade in Bitcoin. And what I've done is change the, before I do that, let's just go around the horn real quick. So over here, these are some Bullinox accounts. I can go to the screen occasionally if I do take any other trades, but I think for the most part, we're done here. For the most part, everybody, the moves were this morning, and they were fantastic. Lots of cross currents going on in earnings with Meta up and Microsoft getting crushed. A lot of the other software names getting absolutely crushed. Decent amount of friends at Salesforce that are not too thrilled with how that stock has been performing, and Salesforce is in the Dow. We have Apple earnings after the bell today, so that should move us around on the NASDAQ, but I won't be staying around for that because Apple reports a half an hour after the bell. Does Amazon report today? Amazon might report today. If they report today, put Amazon in the chat, AMZ, and let me know. I didn't check for other earnings, but I do know that Apple reports. Yesterday, such a wild day with all the things that were happening in gold. And speaking of gold, I don't know if you could ask for more fun than what happened today, which was wow. I almost, did I get it? I mean, from high to low, 56.25 to, yeah. I mean, it's 480. I was calling, I said there'll be 1,000-point down day. I said 1,000-point week, I said. And lots of funny comments I got. No, going to 7,000. Look, all these charts, they end up looking the same. And the reaction last night, I was like, wow, this looks like Tilray. This looks like GameStop. And eventually they come back to roost. But it was a nice hold. Essentially, if you wick out, it was a nice hold of the T-line. This is a 233 EMA. But I would suggest, and this is looking both ways for across the street, don't run with scissors. If you knew the difference between good advice and bad advice, you wouldn't need any. This is not financial advice. I'm usually wrong. You make your own decisions. That being said, you should probably still stay away from gold, even micro gold, for a little while, unless you have bigger risk budgets. I enjoy this because it gets my heart beating a little bit. I play some decent stake poker, not nosebleed, but enough that I'm really interested. And today, gold was feeling like big pots. It just felt like the excitement you get when there's a big pot and you're not really certain of the outcome. So I was messing around with it and had a pretty good time, but I could see how it could be treacherous. In my room, we had a sort of a mixed bag, but most people that were doing what they were supposed to do, which is just hang out on the Dow Jones right here. Right? So here's the Dow Jones. And if you are a member of my trading community and you're able to access the replay, if you're on trial or if you're a member, you can go in and look at it. I'll post it up on in Discord. I think today is a good day to watch because there was so much two-way action in, look at these double wicks up here. This was in the overnight session. This was right on the open. We whipped up here to 49 440s as, you know, Cat's earnings came out and Cat was screaming, and Microsoft was dumping, and Salesforce was dumping, and then Goldman Sachs was, anyway, we were just getting a lot of beautiful cross currents, and I had said this was a perfect opportunity to practice keeping on inventory, which is exactly what I'm doing on here, meaning always having at least one contract on, adding to that, which will turn a slightly profitable position into an unprofitable position, but overall, almost $1,100 made on 4 to 5 lots today in the micro Dow, folks, and that was having between 4 and 6 contracts on at any given time. The other thing I wanted to mention here is on TradingView, I've officially switched to a Hakanashi. So I'm using a Hakanashi 2-minute candle. I just got tired of, you can't use the Renkos that I like that are available on Sierra and Ninja and Tickblaze and a variety of others. So I've just gone with a Hakanashi candle. If you're not familiar with Hakanashi, you can just go Google Hakanashi and it will tell you a little bit about the logic that's associated with these. Many people think they allow you to see trend a little bit more. They hold trend because the open-close logic is a little bit different than a regular candle, so you can just check that out if you'd like. Guy that I respect, Micah, I think his name is Micah Melton, or Micah, I don't know, I should know his last name. Anyway, used to be Wall Street IO. He's always charted with these Hakanashi candles, lots of people. Give me a 1 in the chat if you use Hakanashi and if you ever used it. It's a decent candle to work with. Okay. All right. Let me see. Whenever I get those comments, get absolutely wrecked today, stay in your lane and range trader, you can't get absolutely wrecked. You can only get wrecked for your DRB. So if your DRB is 10% of your account, you can never get wrecked. You get wrecked if you don't hit the close button. And today was actually a great day. A couple times I hit the close button. I hit the close button on a gold trade in an eval, in a freaking eval. Hit the close button on some MES longs. And the one thing I could have done better for the group today was when gold started acting ridiculous, starting that huge fall, I already have a short silver put position on that I rolled out to March and up. So I rolled it from Feb 80s up to March 100s. And the moment I do that, it was fine. It was still super profitable today, but those 80s would have been way more profitable if I hadn't messed with them. Anyhow, or I wouldn't have had to take the loss that I ended up getting back today. But the point I wanted to make was when you start seeing that frenetic thing, well, you could think to yourself, I don't trade gold, so who cares? All the markets are interconnected today now, even to a certain extent Bitcoin. There's decent correlation between Bitcoin and the NASDAQ very often. So when you see that kind of skittishness, that unwind of positions in gold, just get flat everything else, So I'm bummed to hear if you say you got wrecked, but no one gets wrecked if you follow what I tell you. You cannot get wrecked if you just take your DRB and that's it, right? You get wrecked if you are messing around with these things and you and you don't hit the close button, because gold destroyed the bands today, right? Those types of moves, there's no mean reversion strategy that's ever going to work for those types of moves, except for the fact that gold went essentially. Let's take a look at what actually happened with gold today, which is just so wild, is that people can't see this. Every time I do how bullish does it look? It formed a complete Indian arrow up here. It's holding around. In the morning, it's holding around above the 5,540s. Looks super bullish. It's outside day up, so you don't want to really mess with it short or long. Then the fall happens, right? The total unwind. Who knows why this happened? Doesn't matter. It's just more sellers than buyers and all the tourists getting wiped out. This is our bid zone down here on the range trader. Now, if you got involved right here at T-line in this zone right here, which was already drawn in, I already drew this in. I drew it in this morning. Then your first long might be T-line at 15s and then again at 95. And yes, this could completely wick you out, okay? This can completely wick you out. But some of you might have been able to actually find the absolute bottom here before it reversed beautifully. And I've been resting these orders since we kind of came in. So I'm still looking for some crazy crap to happen. Who knows? If it happens again and we revisit, generally when you see these types of falls, you make a slightly undercut low. So I would suspect that we see some trades under 51.50 at some point soon. But again, this is all guesswork just within this structure. Anyhow, sorry to hear you got wrecked, but where's my TPO chart? I don't use a TPO chart. This TPO is stupid. That's the time price opportunity. I don't give a crap about how much time price, how long price stays at a particular time. I don't care. Now, what's interesting when people mention TPO and a lot of indicators is a lot of people don't know their history, which is fantastic. So let me educate yourself a little bit. Every single indicator, almost every single one, obviously not every single one, came from essentially the futures markets. For guys that used to plot this out and then got into computers in the early 80s and built all this stuff that's now used by every type of technical analysis, but it all really came from the futures markets, including volume profile analysis and, of course, TPO. I don't use TPO. I've never had TPO charts on here. So these are just simple volume profile charts. All right. You weren't trying to make the target all in one day, but one mini on HG and SI went very far. Yeah. I've been trading 5 and 6 lots of the micro silver, which is $1,000 $1,000 for every dollar move in silver, and it's been freaking wild. Yeah, definitely wild. All right, let's see. How much volume, what price for what time of day? Okay, if that's not the value. Look, if you guys like anything else, then by all means, I don't really care. I come in here and stream so I can also make some sound bites, because the sound bites are working well for social media, and social media attracts attention to me. And if I can be irreverent and say that ICT sucks or TPO is a waste of time, TPO is far better than like Fibonacci or Gann channels or a Donchian channel or whatever else you like to use. But look, if you're managing risk well, I don't care what your strategy is. This is the other thing. All I want to say is, we started off this by someone saying they got wrecked. You can never get wrecked if you just have your hand on the close button. Just have your hand on the close button. Now look, if you want to gamble it up on copper and nat gas and silver and gold and get through some evals really quick and then fool yourself into thinking that you'll behave differently once you're in a funded account, it's going to be difficult, because that behavior tends to bleed its way over. Okay, so I'm trading all that stuff in completely different counts. Here in the prop world, you're probably working with a $250 to $500 daily risk budget, and within that, you got to make certain decisions. All that being said, it's almost impossible to get wrecked in the Dow today. So I just don't know how you did. You're doing it wrong if you did. Here's the Dow right in front of us. Let me come over to the Dow. Okay, how'd you get wrecked on that? Because here's I can teach this to a 4-year-old. Get short or take profits here, which I was taking profits. Okay. Get long here, and if you can't take $150 or so of heat, then you hit the close button, and that's it for the day. It sucks, but you didn't get wrecked. And then if you you referenced the range trader, your first longs were around 49,000 were the first longs. We get outside the bands a little bit. By the way, the bands here are going to look different than if you're using tick charts. These are Heikin-Ashi channel. They're time-based charts, so your bands will be slightly different, but I try to use a time frame which is about 2 to 3 minutes up to 5, which will keep the levels around the same. So long, cover, short, buy some more, cover, I bought some here, cover, buy, take it off, buy, take some off, and still have one right here with these orders resting right here. That's my job, is to come in and gaslight you. Snap out of it. All right, let me see. Can I comment on the velocity logic? I don't even know what that is. What's velocity logic? I speak to, let me read the rest of the question. And if it makes sense in a web prop sim account for it to be a problem. TopStep X is claiming this is why some people could not exit trade in silver. I don't know what velocity logic means. I can tell you that I refer to velocity as something that someone should understand, different than volatility. Volatility is when price is actually moving out of expected ranges and really forming new ranges. You know, delta rate of change, true volatility. We refer to volatility a lot when things are just whippy or moving very quickly. But as long as they're moving quickly within a defined range, they're not really volatile. They have some velocity to them, some speed. So the rate of change visually looks extensive, which is what's been happening in silver and gold. So I can't really speak to that. That's probably just a combination of platform platform and data not being able to hold up. I had one trade on that fall today in gold in NinjaTrader on a micro, and I haven't gone back and looked. I made like $300 on it, but I had no idea where my fill was or what was happening. That was just a complete unwind. So the other thing is, I don't think we want to optimize for when things get a little crazy, right? I'm sure the prop programs just absolutely love what's going on right now because it just creates so many resets and people buy new accounts and all these kinds of things because there are just so many people just doing it wrong. You know, there's no reason that if you come into my community and implement what I'm saying that anyone should blow up accounts today. We had, 20%, 25% of our group took a big R today, but as long as that big R is $10, $15, $20 within the bounds of what your maximum daily risk is, who cares? You just go fight for another day. So I don't know what that means. I can't comment that for me, it's been a very mixed bag the way a lot of these firms handled Tradevate outage yesterday. It was. I guess it was okay. I'm not as close to it and don't care as much as I'm sure many others do. You guys are putting in the time. You're buying these products from people. I recommend these products. They're great learning tools. But I think most of the firms just did a reset, like just wiped out the day, and that seems fair to me. I had some specific issues where they didn't do that, which kind of sucked, where I was in some positions prior to the outage, and their claim was that stops, and I guess, so I won't refer, but there was 3 firms that said, oh, but if you had a stop in that trade that was placed well before the outage in the morning, stop and target, it would have been hit by that price if you had and I'm like, now we're getting into all kinds of semantics. Who cares? That's not true. If I'm operating within your rules, who gives a shit about where my stop or target is? By the way, I don't have a stop, so my stop is me being able to exit a position at an appropriate time because the data and platform is supposed to work, right? The other thing to note is during that whole time, that of course is only their sim servers. Everything was fine with Tradevate yesterday and NinjaTrader. I have live accounts at there's no difference now. There's no separate Tradevate accounts. Everything is Ninja brokerage, whether you're trading on Ninja or trading on Tradevate web or whatever. There's no difference anymore. So everything worked fine in the real world. The amount of times in my 32-year career that I had no access to a platform was probably the max ever, maybe 2 hours. And I know that some of you have experienced some stuff, you millennials or people that, or Gen Zs or Gen Alpha that use Robinhood. I mean, Robinhood had some like whole day outages at some point with the GameStop situation, didn't they? Or entire times in which people were frozen in positions. All right. Let me see. We're literally talking about ways to use the TPA chart in your Telegram move. I don't use Telegram either, so I don't know what you guys are talking about in my Telegram. I don't have Telegram. I have a Telegram that's old, and I haven't logged in forever because let me just use this also as a PSA. I guess I'm flattered that I've now have enough of a presence that I'm getting imitated everywhere. There's probably 3 or 4 fakes of me, if not 10 or more on certain platforms. I know there's 50 versions of me on Telegram. None of them are me anymore. I'm not DMing anybody. I don't have a crypto system. I'm not asking you for anybody. I'm not going to mentor you or anything like that. I'll never DM you first. In fact, I don't even know how to DM sometimes. I swear to God, I don't know how to DM on Instagram. I have no idea. Everything I have on Instagram, this boomer, is being run by somebody else, and they just reply to any time someone puts a comment in my Instagram. So I'm never going to DM you. I'm not asking for anything other than for you to come in and check out my trial in my trade room, which I am live in every day, Monday through Friday, or for you to download the free ebook, or for you to take the Futures Fanatic course, which is completely free. All right, what's your thought process on long Dow at 9:12 Eastern? Long Dow at 9:12 Eastern. Somewhere in here? Maybe we should look at it on... Is it easier to look at it over here? So 9:12 Eastern is 6 for me. Six something. Well, let me just talk about the longs I took in here, okay? So these are a combination of, I guess I could select an account. There we go. So here's a long right here. I'm not exactly sure. It's in the offer zone. So everything's in the offer zone here. Outside the bands, this is probably, oh, so I remember 48 nines here. These are around the minus, well, let's look. Now you have me interested. 48,977 is prior low. So here you go. So first thing, this is a bull continuation, excuse me, a bear continuation pattern on the Dow. Completely opposite of what we had going on in the NASDAQ, right? So right now we got Russell weakness and we got Dow weakness for a little bit. It could change at any time. NASDAQ is a mixed bag because of what's going on with the earnings right now. But anyway, this is starting as a bear continuation pattern. For those that don't know how I teach and talk about this, this is a 233 EMA. You don't need to buy anything from me to apply a 233 EMA to your chart. Okay, we call that the T-line. I only use 1 or 2 moving averages at most. All I want to do is have a quick way of referencing whether we're, in my opinion, on a higher time frame in a bull or bearish pattern. So right now on the Dow Jones, we are in a bearish pattern. Okay, because price is coming up. Look at these lines. You see how it's wicking up to this level? Okay. Now, where do we get a 233? I've talked about this before. I had some great trading partners and mentors 15, 20 plus years ago. Spent a lot of time running back tests on TradeStation using something called Easy Language to try to see the settings that were most relevant for various indicators. Many of you probably know that a lot of standard indicators come with like 14-day periods or whatever. There's defaults, right? And then there's a lot of people out there that try to sell you bullshit indicators or bots or things that are based on indicator logic that need to be recalibrated all the time and just work in certain particular environments. Never buy anything in terms of a bot or anything. If it works, it wouldn't be for sale, okay? Now, at some point, I might offer automated entry logic based on the stuff that I teach and train on so that you know and understand why the machine is taking an entry at some place, and it wouldn't be that very, very difficult to teach a machine to sell each time if price is below this line, right? Take an order every time it hits it. You can have another one that says take an order every time it hits it. It goes up to the prior session high. You go short right here. Now we had these wacky wicks here this morning. I don't remember anything like this in the Dow in a little while, but you know. And to this, I don't know what this was right here at 4 a.m. That's 7 Eastern. But getting back to why I was long at 912, that was developing POC. The best starting point here would have been 48,979s or whatever, right? And then this whole thing just fell apart when gold started to fall apart. But anyway, it's a manageable trade. I'm just looking at this PA. I'm like, I didn't even realize I made $1,900 in this PA. So, and this is trading micros, everybody. I'm not trading minis or anything. This is $1,900. That's crazy. What was okay, that's an outlier, so I didn't have the copier on. That's $483. All right, I don't know if that really helped, but the logic behind any long is generally going to be a range trader level or a stay in your lane level. So thanks for the question. I just rambled on for a long time. I left one MGC on last night, and when I woke up, it had been closed. Great, if it hit your target. How am I using the strategy with Interactive Brokers? I'm just using the same strategy. So this is Interactive Brokers. Okay. I hide the, well, I don't have the account up right now. I'm not going to put the accounts up anymore. If this one has like 35 grand in it, so it's enough that someone might want to try to go and steal my shit. So I'm not putting the, but I will go over here. I'll show you this one. This one's at Tasty Trade, and it has $6,900 in it. And today, the account summary, see, that's 526. So what will happen tomorrow is I will go into this account and I will remove $1,918 for 1 month's worth of work in a small account. how do I sound this without sounding like a jerk? I don't give a shit if I sound like a jerk. I'm only doing this for my community. I fucking do not need to trade a $5,000 account up to 5,500 or 7,500 or 5,600 or in this case 6,900 every month and take out 3 or 4 or 5 or 10,000 bucks from tiny little accounts. So, but this is a great question. How am I doing it in Interactive Brokers or whatever? How am I doing it in Tasty Trade? I'm doing the same effing thing that I teach. This is a stay in your lane chart. This is the Dow. I'm resting an order down here. If you watched my stream yesterday, let's open up plus 500 because plus 500 I'm going to take I don't know, $1,000 out of. Let me just take you up here. Okay. God darn it. Should log me in. Okay. So yesterday, if you watched my stream it was during the FOMC, we had an order. I think it was also at 49,000. All I did was come over here. This interface sucks. You can't chart off this or anything. But if you know my strategy, which is simply just offer out liquidity in your offer zone, 2 standard deviations above VWAP. Look to offer liquidity or start to go long 2 standard deviations below VWAP. Do that within a context and an understanding of whether you're in a bull or bear continuation pattern and an understanding of how much risk budget you have at the moment you enter a trade. Apply all those things together and you have as close to the Holy Grail and a magic formula as you need. But really the magic formula is don't lose a lot of money. And if you don't have the discipline to not lose a lot of money, please stop trading. Trading is not for you. Gambling on prop programs is not for you. It's not for everybody. I could teach this to a 2-year-old how to do this. Maybe anyone who knows how to use a computer. Anyway, this balance has 6,095 in it, and I'll take $1,000 out, and we will be right back at. And I'm only doing it to be intellectually honest about what is possible, because I want to build a community of finally in 30 years of doing this and 15, 20 years of trading education where people actually have success, real success, not me. You can ask me for statements and tax returns and all these other things. Instead, why don't I just show you small accounts? Because I don't know if you have $500,000. I don't even know if you have $5,000. But I think a lot of you probably can eventually get $5,000 together. And if I can help you understand how to every single month produce 15 to 30% returns on $5,000, not compounding. It's a different game. Okay. I'm not suggesting that you can do the same thing with $1 million. You can't. You can't do 30% on $1 million every month. It's not going to work. It doesn't work like that. But on small accounts, the math does work with levered products if you use leverage properly. The best thing that ever happened to trading in futures was the micros for stock indices. They're liquid. They're fantastic. So not only should you not be trading minis in your prop programs, you should probably not be trading minis until, as I've said on this channel many times, you have $30,000 to $50,000 real money per mini. Because then you can actually, it's not the margin requirement necessary to trade that way. It's also having enough buffer to trade the way I'm teaching, which is adding liquidity, adding campaigning around price. These things are very important to learn how to do. Okay, the problem with a mini also is it's a very binary decision. If you're only trading 1 or 2 minis, you have to make very, very binary decisions, right? Buck, here's my stop, here's my target, butthole pucker time the moment I get in. You have no comfort level as opposed to being able to trade. Stop that nonsense and don't even trade the MNQ anymore. Come in and trade, see if you can trade 2 to 6 MYM. 2 to 6 MYM. Okay, and you can do that once you have about a $500 to $600 daily risk budget. And if you have that, then there's no way today in which you get wrecked. From any price you enter, you don't get wrecked. This didn't technically touch, but you didn't get wrecked there. Here's your first long. You could have gracefully exited here. I mean, I can't even discuss. This is only really a few hours of, not even an hour and a half of trading. And those in my trade community will say, what is the purpose of mean reversion the way I'm teaching it? I am just trying to stay in the game to earn the right, especially on the long side, because markets are so torqued up now, especially on the long side, to earn the right to build inventory and be in the position for the moves when the moves happen. That's all I'm trying to do. I just want to earn the right. And over here today, I've earned the right to hold a 1 lot up and down all day long as I trade around a 3 to 6 lot. Cool. We burned a lot of time there. By the way, what's happened with Bitcoin? I started today saying we're just going to sit and watch Bitcoin. It's farting around. But here's what I would do on Bitcoin, the strategy. I don't know if I have enough margin left. I probably do. There we go. All right. So now I'm looking at a 5 lot on micro Bitcoin, which is pretty sizable. And again, this is a live account, so I can quote unquote swing trade. If you're in prop programs, don't complain about not being able to swing trade. If you had this exact same position on, just close it when you need to close it and reopen it again. If you had a 4 lot on that was down or up, just close it at 5 p.m. Eastern or right before, and then open it up again at 6 and stop complaining. But that hour in between that I'm going to hold, I just don't have to pay any commissions for that. Are there gaps sometimes? Certainly. There's a huge gap yesterday in gold, but those things are rare. The vast majority of the time, there'll be very, very little movement on the reopen at 6 p.m. Eastern, and you can just get right back in your position. But in this case, all right, let me cancel that because that's not really an official target. Oh, shit, it is. It's right here on this yellow line. So let me teach this really quick, okay? I'm building a long position in here. It's not working out. I took one off here. So bot, covered. Bot. I think this math works out, right? 1, 2, long 1, long 2, long 3, long 4. Yes, okay. So it works out. So I'm long 4. To many of you, this might look like insanity. Like all you should be doing is looking for a short. I don't mind if you short at all. You just have to get up to this level. Don't short here. It worked out today. We went from 85,000 went to actually from 87.2s down to here. But now when you're down in here, it's just longs and then controlling your risk. Target is going to be right here at this yellow line. Okay, this is the visible range profile POC. So I'll put one target right there and I'll put one target right here. And as you can see, I have no stop in here. I just have an add. Can everyone trade this way? With 20 grand, you can trade exactly this way, even in micro Bitcoin. With 5 grand over here, you can't trade that way. You can trade 2 or 3 Dow Jones in a $6,900 account. It's just math, everybody. There's no other. You cannot argue with me. You honestly can't. And I hope my guys make some clips here and tell them to argue with me in the comments. You can't. If you're fucking around in prop land, I don't want to hear from you. I love it. I'm doing it. I want you to do it. I want you to learn how to use it. But props are just small accounts. So we're also showing live small accounts so you can see exactly what you need to do and how you need to manage risk. If you do this, then you'll develop the muscle that you need to do the same thing across 3 or 5 prop programs at 5 or 10 firms, and then turn your $1,900 that you see down here in the month of January into $10,000 because you did it in one live account and 10 prop accounts. My math is even wrong there. If you did $1,900 in 10 prop accounts, it's 20 grand. So go ahead and try to poke holes in it. I don't know how you can. And the other thing I just did was I put $5,000 in Robinhood. Gulp. Never had a Robinhood account. Put $5,000 in Robinhood because they're offering futures very soon. I think they already do. So $5,000 in a Robinhood account, and I got a little plugin that's going to allow me to bring up my Robinhood account here in the stream, and you can look it on my phone. I know they have web-based too, but I want to do it on the phone, and we'll do the same thing. You can watch me trade 1 micro and grow a Robinhood account from 5,000 to 55. I'm just making up numbers here, and there will be times when you're first learning that instead of growing 5,000 to 7,000 that month, you might lose 800 bucks. Maybe. That would be if you hit your DRB like 3 or 4 times during the course of a month and never made any money. While you're learning, that might happen. But there's really no excuse ever for that to draw down more than $1,000, which is the same thing I say on the prop programs. I love the fact that in my community now, when people are showing screenshots, they're showing the balance of their account, and sometimes it does say 49.1 or 48,790. They're in a $1,000 drawdown. The best thing you can possibly do is, instead of blowing it up and acting like a donkey or going real fast because your subscription is going to renew for 80 bucks or something, just work your way out of it. Because there's no reset button on a live account. How do you determine Renko brick size? I've been using for a long time a 6x1 on. Now remember, when we're referring to Renkos, these have to be modified Renkos where you can affect the offset. You can't put Renkos on TradingView, unfortunately, because they don't offer true tick data. They do if you upgrade, but they don't allow developers to actually go in there and create a similar type of bar. So you have to use a platform like Tickblaze or Sierra or Quant Tower or NinjaTrader, and then you can get the Renko's offset. The way we determine them also is from a lot of back testing. So I tend to use 6x1, which means a 1 tick offset and a 6 ticks bar on the ES, and that gives you a 1.5, right? So then if you need basically you double that for reversal, right? So it's about 3 points to create an actual reversal. No capital letters. Whoever's putting capital letters, stop with the caps. My thoughts on hedging prop firms against each other. I wouldn't do it, but what I would do is hedge. I wouldn't refer to it as hedge. I would trade the same strategy with live accounts that are in positions. Like, let me give you an example. I'll give you a real world example of something that might make sense. All right. So over here, I am long Bitcoin, right? We all see I'm long 4 Bitcoin. Let me move that target out of the way, right? So I'm long 4 Bitcoin. That's my position. I could see a world in which, let's say this starts to rally all the way up to VWAP, and I have a funded PA account somewhere. We use those terms PA. You have a funded account over its buffer. There's our market on close orders. We're getting a little movement into the upside. And hold on, let me see what's going on here. Oh, don't want to be short there. Gold's rallying, I guess, here, huh? Yeah, a little rally from gold. So back to my thought process here before I lose it. So the question is about hedging or trading in 2 different directions or all those kinds of things within different props. Instead, what I would suggest is you're using the very same strategy, right? So I'm long micro Bitcoin right here. My target might be up here at VWAP, right? As price starts to go, I'm making money. Obviously, I can take target on one of them, which I would probably do anyway. But if I had a short that I wanted to take at VWAP for some reason, I'm not going to take a short just because I want to hedge out this position. But if I actually had a downward sloping VWAP and I wanted to use VWAP as an entry short on Bitcoin in one of my prop programs, then I could sell it there. And now technically I'm hedged. I'm making real sim dollars in my prop program short MBT. But in the real world, I'm long MBT. And this will frequently happen to me. And I try to point it out in my room, but it doesn't really make any sense. I mean, rather, I just want to what they're seeing on the screen. Nice rally from gold in the close. What they're seeing on the screen, I just want to keep it simple. But maybe there's a way of answering that. So don't do anything to try to pass or because it's not sustainable. Right? Trade a strategy, and if you have this, here's why I hate the hedging rule that still exists a couple places where they don't allow you to have a long and short in a correlated instrument. That's just nonsense and bullshit. I've said it a million fucking times. And please, Apex, get rid of it as soon as you can. It's total nonsense. In fact, being long and short correlated stock indices in the futures markets is something the CME encourages. They'll give you more. They'll reduce your necessary buying power if you're properly hedged. If you're long the S&P and short the Dow, or short the Nasdaq and long the Russell, you get a bonus for doing that, because in some instances, in theory, you should be protected against adverse moves in one direction or the other. The problem is hedging should be done in a natural state within your strategy. Don't enter a trade to offset another trade at some level that you wouldn't enter that trade to begin with. Can I get a 1 in the chat if that makes sense? It's really, really important. So more often than not, when I'm hedged, it's completely accidental. To the point with Bitcoin right now, I would know I'm long. I would only take a short in my prop program at VWAP if I already had a signal to take a short there at VWAP. I'm not going to put it on just to hedge off my long position in live in Bitcoin. Okay, nice move for the Nasdaq too. Little strong close here. How about my Dow? There you go, baby. $56. All right. I think most of you are cool. You guys all got that. Thank you for the ones. It's really critical because in this new world order too, there was probably about a year and a half that I recommended people never use a copier. We had a bunch of people in my community early on. This was probably like 21, halfway through 21, and they were showing all their accounts with all the profits. Always profits, right? Never all your losses levered across multiple accounts, but they were showing all the profits, and I was just like, you guys slow down on all that. Just learn how to do things in a few accounts. These copiers are toxic. And a couple years ago, I changed my opinion on that, and now they're an amazing tool like anything else. Once you understand how to utilize them properly. But what I was seeing was this whole thing where people were constantly trading one account across another, or copying 3 things this way and 4 things that way. And I'm like, shit, now I'm, and I just flat out said, don't do that. Please stop that. And then of course, here we are later, and there's a bunch of firms that say they prevent that type of behavior because so many people were doing that type of behavior. There's still a lot of content out there where they're just literally still teaching, hey, here's how you take $10,000 and manipulate these and get yourself to at least 10, and then everything else is just gravy because you're going to buy 10 here and you're going to buy 5 there, and then you're going to go this direction here and that direction there, and then you're going to blow these up, and then you're going to run these up. And and a lot of people just like, well, fuck these firms. Let's just go get my money. I don't give a shit. And I'm not apologetic for these firms. Look, there's 30 futures firms now and 300 CFD firms because they're profitable. If they're managed properly and run properly, they're profitable. All right. I think that was it for. So this is a good question. If you're in a bear continuation pattern, should you only be looking to take shorts? No. So it's a consideration, and the trickiest thing with bear continuation patterns are the further you get away from T-line on the bear side, the better the probabilities are for your longs, just because, again, the markets have natural positive skew to them, and I don't know how many more times we need to see V-bottoms. You can see one today in gold, right? I mean, we probably were definitely in for this. Let me move these orders up here. I really don't want to get short gold here, but let me... I think my head's in the way now, again. You guys can see this V-bottom, right? By the way, also, where did it wick out? It wicked out at this weird... I joke about this in my trade room all the time. This guy might be onto something with this orange line here. Now it wicked down, and that was a $70 wick. So I'm not going to discount that was butthole pucker time if you got long there. I'm not saying many people could even hold a micro through there, but if you see where it wicked out and then eventually held on this candle, it's right at a 233 EMA. So what I was getting at is, no, you don't need to favor or have a bias for the short side. I just describe it as a way to describe the markets. So good question. Oops. Put our thing down there. 3 more minutes left. Let me see. Anything else? So would you say stay in your lane, wait for 2 standard deviations above VWAP? Okay, here's the thing. Stay in your lane is relative to the percentage of range relative to the 7-day ATR. So I'm going to explain this. I guess I'll say it every single day on the stream. The best way to learn it is to come into my trade room while I can beat it into you. And I get it. It's not a concept that people understand right away. Okay? Not all bands are created equal. I'm not using an anchored VWAP to anchor to any particular price time. I'm using extended trading hours, which means the bands are going to reset at the 6 p.m. Eastern Standard Open. Okay? If they reset at the 6 p.m. Standard Open each night, okay, logic would tell you if they're squished down like this, right, you can't trade this, right? You need to wait for this, okay? And then how wide do they have to go? A framework that we use is you're looking for 50% of the ATR, 7-day ATR, to tell you that the bands are ready. Now, if it's right around 30 or 40 or 50%, you're probably still only interested in 2 standard deviations above or below. But if you have today, like we had on gold, we had 138% move on gold already before we even started the session. Gold's probably not the greatest example today because 2 standard deviations on the downside didn't hold for shit, right? But gold is a little bit of an outlier. The stock indices are not going to behave like that. And if you have 50, 60, 70, 80% of the expected range, so what do I mean? If the ATR on the S&P is 70 points and you come in at 8:30 Eastern Standard Time, an hour before the market open, and you see that there's been 66 points of range when the entire expected range for 23 hours is 71, you now have volatility bands that should serve you well. It is a high probability that price will stay within those bands, okay? How you operate within that framework is then dependent on 1, your daily risk budget, okay? 2, and this is a little bit more nuanced, your skill level, okay? If you're just starting out, yes, only hang out at +2s, okay? But as you get more skilled, you can trade +1s, you can trend trade off of VWAP, you can trend trade off a +1 or a -1. The skill levels will start to happen over time. But the most important and the third factor is once you're going to enter, you need to understand if there's other levels that are there relative to what your daily risk budget is. So this is a fancy way of saying the bands are not always created equal, and how you operate within the framework will depend on a number of different factors. All right, we're all done for the day. What are your thoughts on bankruptcy clawbacks? I don't have any thoughts on that at all, except for I'm unfortunate. Fortunately for me, I've only promoted or talked about 2 prop firms that went belly up. One was NextGen that just disappeared in the middle of the night. I don't have any idea what happened with them. And the guy's a legit dude too, but I'm not sure what happened to them. And the other one was called Profit Trade. So you're referring to the situation with Fast Track Trader. I know nothing about it other than the fact that the guy was a complete asshole from the very beginning, and I never was involved in it at all. And I actually warned against that one, and I warned against 3 others that actually went bankrupt or went out of business that I never mentioned. So if you're getting a clawback that sucks, I'd recommend you get yourself an attorney. Hey everyone, I bought a 25K Lucid. Hey Starb, what's up? That's a great deal, dude. So you found the right one. That's exactly what I wanted you to do. So you went and got it. So you got a 25K account for, it's $50. It's only a one-time fee, and it includes the order flow suite with NinjaTrader prop. That's a great way to do it. I should probably get a relationship with Lucid or something. I don't have time to do all these prop codes and stuff anymore. Good job, dude. I'm glad you found that. That's probably the best thing. I have no idea who Waylid was, so I wasn't involved in that one either way. Yeah, and the bands are called Standard Dev VWAP right here. Standard Bands VWAP 2. I don't offer a template for this. It's better if you build it yourself. Okay, I think that's all the questions for today. Have a great weekend. If you haven't already, please do consider downloading my ebook. It's completely free. Comes with 10 free lessons where I read the ebook to you if you don't like to read. It'll also show you how to jump on my trial. Even if you don't think a trade room is right or you don't have enough time, you got to find one way to practice deliberately, and I would suggest that that's through a one-to-many mentorship and a great supportive community. So really strong pitch for checking out my trade community if you haven't. And finally, it does help if you do hit the like button and subscribe to my channel, all that good stuff. All right, everybody, stay green, trade like you mean it. Appreciate it. Be good.